Hello and welcome to Pro Trader Strategies Market Commentary for Friday the 13th. My name's Eric Wilkinson. Despite the fact that it's Friday the 13th, everybody's probably happy because it looks like the markets are up across the board. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Anyway, having all that out of the way, let's get it on. A lot of economic data today. Good economic data today in the sense that here in the United States, not so much across the pond, but here in the United States, we got CPI, which is Consumer Price Index, came in at 0.5%, lower than the expected 0.6%. And then we got core CPI, Consumer Price Index, which strips out food and energy, some of those more volatile aspects of that number. It came in at 0.1%, expected to be 0.2%. Now, those numbers are lower than what was expected, which is not necessarily a good thing. We aren't seeing any inflation. And we talked about this earlier on. The Fed might continue to raise rates despite the fact that we're seeing lower inflation than what they would like to see, which doesn't seem to make a whole lot of sense other than the fact that they're looking at their balance sheet more so than they are looking at what is going on in the economy. So that's something to really keep an eye on. One thing we did get was retail sales came in pretty good at 1.6%, was expected to be 1.7%, but they did revise last month's number up slightly. And then retail sales, which includes like autos and things of that nature, came in at 1%, was expected to be 0.9%. Now that reading is the highest number that we've seen since June of 2015. But a lot of that has to do in part to the hurricanes and people going out there and spending. Remember, I talked about this when we saw all this happening with a lot of the autos that got totaled out due to the flooding. Those people are then collecting insurance and going out and buying those types of products. So we're seeing that reflected in these numbers here. So keep that in mind as well, that most of that has to do with the hurricanes and damaged goods being repurchased now, and mostly through insurance. So it's not necessarily a sign of robustness in the overall economy. So it is going to help out a lot of these businesses like the auto dealers and things of that nature. But at the end of the day, it's not really a sign that the economy is starting to take off, if you will. All right, let's get on to the overall markets. We've got crude oil up 83 cents, 51.43 right now, and it is really toying with that Fibonacci level that I talked about. We kind of blew up through that on some of these economic data points. It's starting to pull back just a little bit, but I would like personally to see that stay above that Fibonacci level, or that level of 51.50. So 51.47 is the fib level. We're right above that right now, just kind of bouncing off of it. It should act as support, so I'd like to see it stay above there at the end of the day. Then on to gold futures. They're moving higher. It's up $6. Not really sure why gold's moving higher, but it is. It's just more of along the lines of technical, I guess, that it's moving higher right now, and people are starting to run for it. Same thing with the bonds. Bonds moving higher because we're seeing those lower inflationary numbers. I guess people think that maybe the Fed is going to ease. They're not going to. They're still talking that they are going to increase interest rates, but the bonds moving higher, almost up at full point right now. The VIX coming off quite a bit as we're seeing all-time highs in most of the equities across the board, with the Dow Jones Industrial Average up 43 points right now, almost 44. As you can see, printed an intraday new all-time high. It hasn't settled there yet, but the settlement all-time high is over here on Wednesday. But new all-time high in the Dow Jones Industrial Average. Same thing with the NASDAQ. We're seeing a new all-time high in there as well, up 24 points and change. Market very near the highs right now. We've got the E-mini S&Ps as well. Same story. New all-time highs, up 4 points, 4.5 points and change. This is what I want to show you on the 30-minute chart. These are 30-minute bars on a daily segment breakdown. One thing that happened overnight is we saw the all-time high happen, which is what's being reflected here because it was the first print. But if we slide right over here into the day session, right after we started seeing those economic data points, you can see that the high here is lockstep with that high that was created overnight. So that does make that a solid number as a high that people will respect. If we take that off, you can see that that intraday high is the same. So that will be respected as a high and doesn't really need to go any higher to make that a real number. It is there. So in the day session, they printed that, made that successful. So that will be the high that people will be looking at and respecting. Now, haven't done a whole lot today. I've got a couple of orders working, but nothing really coming through. Only thing I've done today is Adobe. Played this to the downside in both my IRA and in my margin account. Very small, albeit it is a long put spread. So I don't like to do those big anyway, but just trying to get some money to work and not really sure of this. It does look like it's a confirmation of a top here, so I would expect, or at least like to see it come down, test this 23 Fibonacci level. That's what I'm expecting for it. I'm not necessarily bearish Adobe, but this technical setup, it covered this gap that we created on their earnings event, so I'm looking for it to come back off. They don't have earnings for quite some time, so I went into the December and I bought the 160 puts and then sold the 145 puts to finance that extrinsic value that I talk about in these webinars, and I paid a debit of $6.82 for that trade. So very small, like I said, did basically a one lot in both my margin and my IRA. It's not going to change the deltas that much, but I just wanted to, like I said, get some money to work and get those trades on to add something to my portfolio with a little bearishness to the downside. All right, today's webinar is going to be on the broken wing butterfly on the put side. We did the call side last week. I'm going to be talking about the put side. This is going to eliminate our risk to the upside. So we might have a scenario where we believe that this underlying is going to trade in a pretty tight range. That would be how we get our max profit on that trade. But if the market moves higher, we are going to be able to profit for that, or at least not have any risk to that upside. And I'm going to show you how to build that strategy out to increase your probabilities of success today. So go to protraderstrategies.com and sign up for that. All right. Have a happy Friday the 13th. Looks like everybody should be happy. So a little bit bizarro in that regard because of being Friday the 13th, I guess. And that's all I got for you. If you can't take that, take it easy.